Momentum is an integral part in any trading portfolio. In fact, hedge funds trade billions of dollars using momentum. Of course, you can use different time frames to trade momentum, from long term to really short term. In this video, I will explain to you what is momentum and how it works and how we can build strategies using this indicator. Also, make sure to stay till the end where I will show you how to combine momentum with mean reversion as they complement each other very well inside a portfolio. So here I plotted 5-day momentum on the S&P 500 chart. And what momentum is doing is measuring the speed of change in a set time period. So for example, here we're measuring 5 bars. So we're measuring the change over 5 bars. So momentum goes above and below zero when depending on the change between the bars. So since we are measuring 5 bars, so if the close is less than 5 bars ago, then it will go below zero. And if the close above 5 bars ago, then it will go above zero. And for example, here we can see on this bar, which is this bar, very close to zero, because 5 bars ago, the close on both bars are very close to each other. And that's why the price here is near zero. Again, we can see the same phenomena here, where the price here is the same as the price here, and we can see that the momentum at this point is close to zero. So from that point of view, even when we see the prices going up, we can see that momentum is going down because it's measuring only the change of the number of bars ago. So all in all, it's an extremely simple indicator. I mean, we're just measuring how far the close went today from previous bars ago. That's it. So now that we understand how momentum works, of course, we can use it to trade any instrument. And because it's measuring how far the price went on previous bars ago, then we can use it as breakout or breakdown. So basically, if it's above zero, then we can use it to go long, and if it's below zero, we can use it to go short. Now, there are other ways to use it, like you can do divergence, but I stay away from those because it's hard to program and they get complicated, and it's like kind of subjective, which I don't like in algo trading. The best way to use momentum is through a simple strategy. For example, if momentum of 40 bars is above zero today, then that's it, we go long, and when it dips below zero, we go short. That's just like trading any trend following strategy using moving average. In Algo Wizard, momentum is used with a times 100, so 100 is like zero, and this is the ES, and if we do momentum, we can see it's just like trend following, and it does work, but of course the number of trades is extremely low. So now we will use a little bit of twist to make the strategy unique. So in StrategyQuant X, we have a comparison that says greater for X number of bars. Basically, it compares two values that is true or false for X numbers of bars. And here I put same momentum 40 greater than the previous momentum for 3 bars. So what I am looking is, this is the momentum of 40 bars, and I'm looking for the momentum to be higher than the previous momentum for 3 bars. So 3 bars in a row, it's higher, then we go long, and when 3 bars in a row goes lower, then we exit. And with this strategy, we get more trades, and also we get rid of the false signals. So again, this is on ES, and since 2009, and now we can see that we already have a better number of trades, and we're making good profits, good drawdown. All in all, it's a good strategy. So if you missed my last video where I showed you a trick on how to get more trades, usually traders go from either daily to 5 minutes. But of course, there are so many grades in between, and 5 minutes, it's too noisy, even 15, 1 hour. So if you start going down from daily to something between 4 to 12 hours time frame, you will find most of the time that your strategy will work while staying away from the noise. So now let me switch. This is 24 hours, and let me switch to 12 hours. And it's definitely really good because I double my trade. Of course, I'm making more money because of that. This is $500 average trade. Open drawdown is 34%, and exposure at 50%. So all in all, I would say this is really good strategy, especially on one instrument, and we can of course combine it with others. Now let me draw your attention to something really nice here, because most of the times I do mean reversion strategies, and let me show you how this is different, because this is a breakout model. So look at this. So during COVID crisis, we barely have an open drawdown of 14%. That's because the breakout profile is totally different than the mean reversion profile. Remember, with mean reversion, we are waiting for the price to dip below some point, like a percentage or a Bollinger Band. Basically, we're waiting for the price to pull back. While with the trend following or breakout strategy for momentum, we are actually waiting for the price to make a new high to go long. So both of them are going long, but at totally different points. And so this is the ES 3 bars in a row, momentum of 40 days to go higher. This is the profile since 2009, which is where I have the data starting from. And this is the same strategy on the NASDAQ. And again, because we know the NASDAQ is really good complement to the ES, and this strategy is also doing very well. And this is the portfolio combining both. And again, we can see that it's doing really well. It's 300,000, but the winning percentage is really low. Compared to the RSI portfolio, which is also trading intraday and combining the NASDAQ and the ES. So if I go to portfolio correlation, we can see that the RSI2 are correlated with the RSI2 of the NASDAQ. And for momentum, again, the ES momentum is correlated with the NASDAQ momentum strategy. But when I combine them all in a portfolio, so now I have 4 strategies, 2 on the ES, 2 on NASDAQ, we can see that the RSI is almost zero correlation with momentum. So we can see here RSI with momentum, or you can see it in this corner. So it's almost 0, 0.01 and 0.02. And then of course we can see their equity, and we get a much better equity chart by combining the mean reversion and the breakout version. So we can see while the profit and loss was not correlated, but we do have a overlapping trade. So this is the ES momentum number of open trades that is overlapping with the NASDAQ, and this one, the ES momentum open trades that's overlapping with ES RSI trades. And look at this. So this is May 8th and it closed at 12th, and the other one opens at 11th and close at 15. And you will notice this all the time, and the reason why is because we close the RSI when the price goes up, which means we are going to open the momentum trade at that time. And of course we have different overlapping periods. Although they overlap, it's not the same all the time. So this is 1 day, 8 hours, 16 hours, 3 days, so on and so forth. So this is really good. Even the overlapping, I would say it's good. And now of course we lift the exposure to 78, but now we are compounding at 44. But of course, this number is not reflecting the real compounding, because the starting capital is not included in this strategy. However, this will be correct, which is the winning percentage and the average trade, and of course the drawdown. And that is the power of complementing 2 different strategy profiles. So trend following has totally different profile than mean reversion. Mean reversion usually low average trade, high winning percentage, and the opposite is with trend following. And when you combine both, usually they really complement each other, the strategies. But remember to always develop them alone and then combine them in a portfolio. Of course, if you have any questions, any comments, please do so below the video and I'll be more than happy to answer you. And if you got any value out of this video, I would really appreciate it if you can smash the like button, share the video with others, as this will help Google algos to push this video to other traders and other investors like you. Of course, if you are new to this channel and you made it here, thank you for joining. I really appreciate it. Do subscribe and hit the notification bell so you don't miss any of the great videos that I post on this channel. If you want to learn more, download the strategy, extend the conversation, you are most welcome to join the Discord server through through the link below, where I host weekly live question and answer sessions alongside the tactical asset allocation portfolio signals and the many strategy codes, just like this one, where it will be available for free download over there. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.